All right, welcome back. You ever just stop and wonder what's actually going on inside the mind of a big time advanced trading AI? I mean, how does it take this just absolute avalanche of information and make these split second, super high stakes decisions? Well, today, we are going to peel back the layers and see exactly how one of these things thinks.
So here's the fundamental problem, right? The market is just noisy. You've got bullish signals over here, bearish signals over there, and a whole lot of stuff in between, all hitting you at the same time. So how on earth does a system cut through all that chaos? How does it take a mountain of data that completely contradicts itself and forge it into one single coherent strategy? That is the exact puzzle we're going to solve today.
Okay, so it all kicks off before the market even opens. The system does its first pass, its first look at the market. You can think of this like its morning intelligence briefing. It's pulling in all the standard vital signs just to get a baseline read on the market's health.
First up, the absolute basics. The system clocks the current price of SPY, the big S&P 500 ETF. This morning, it's sitting right at 645.05. Simple enough. This number is basically our anchor point for everything that's about to follow. Next, it glances at the RSI, the Relative Strength Index. This is just a momentum gauge. At about 59, it's kind of hanging out in neutral territory. It's not overbought, it's not oversold. So what does that tell us? Well, the market isn't showing any crazy momentum in one direction or the other. At least not yet. But then we get to the fun part, sentiment. The Fear and Greed Index is clocking in at 64, which puts it squarely in the greed zone. This means investors are feeling good, confident, maybe a little too confident. And for a trading system, that's not a buy signal. Nope, that's a yellow flag. It's a warning. So let's put all these pieces together. On one hand, the system sees the prices above key moving averages. Trading volume is strong. I mean, those are all classic bullish signs. But on the other hand, that greed sentiment throws a wrench in the works. The technicals look great, but the human element, the psychology, is flashing this big warning sign of potential overconfidence. It's a conflict. And just as the system is trying to sort through this mixed bag, boom, a second, much more urgent analysis drops in. This comes from a totally different module, the DOTA SV 2.0 system, and its take on the market could not be more different. This, my friends, is where the real drama begins. And right here, the conflict becomes crystal clear. The first report saw a nice established uptrend. The second one, it sees a risk-off environment with rising volatility. One suggests, hey, maybe buy a few things. The other one is practically screaming, implement hedges immediately. Hedges are basically insurance against a market crash. The system is now holding two completely opposite roadmaps. So, the billion-dollar question is, which one is right? Now, instead of just guessing, the AI does what it does best. It digs deeper. It becomes a detective. Its mission is to find this single source of this massive disagreement. It needs to find that one variable, that one data point that's causing these two systems to see the world in completely different colors. And that variable, it turns out, is the VIX, the Volatility Index. Honestly, the easiest way to think about the VIX is like the market's heart rate monitor. When it's low, everything's calm, relaxed. But when it starts to spike, it means fear and uncertainty are creeping in. It really is the market's fear gauge. So that bearish Delta AS report, the one screaming about risk, it's basing its entire conclusion on a VIX reading of 17.15. Okay, just hang on to that number for a second, 17.15. Because the system's other data feed, the one that was fueling that more bullish analysis, shows a VIX of just 15.3. And there it is. That's the smoking gun. The entire massive conflict comes down to a disagreement of less than 2 points on the VIX. Now, you might be thinking, okay, so what? Why does this tiny difference matter so much? Well, it matters because the system's core programming has a hard and fast rule. A VIX level of 16.5 is a critical threshold. It's a tripwire. Below that number, the market is stable. Above it, the entire regime changes to risk off, and a totally different set of defensive strategies get triggered. And get this, in the system's own internal logs, the impact of this tiny discrepancy is flagged as major. This isn't some minor detail. It is the master switch that determines whether the entire trading day is going to be bullish or bearish. The whole strategy for the day hinges on which side of 16.5 the VIX really is. So what's a machine to do?
Well, it doesn't guess, it doesn't flip a coin, it does something far more intelligent. It builds an elegant solution that accounts for both potential realities. It creates a conditional playbook that can adapt to whatever happens in real time. And here it is, the solution. It's just a beautiful, simple decision tree. The system's very first action at the market open isn't to buy or sell anything. It's just to check the live VIX number. If it's below that 16.5 threshold, great, it runs the bullish plan. But if it's at or above it, boom, it immediately flips to a defensive plan, complete with hedges. Problem solved. It's a simple if-then statement. And all of that logic gets boiled down into this, the final tactical dashboard. Look at that! The chaos is gone. All that conflicting noise has been replaced by a primary plan, ready for that risk-off scenario with exact price levels that trigger every single action. You can see it's ready to buy puts, which are bets that a price will fall on SPY and Tesla, and calls on UVXY as a hedge. The confusion has been forged into a crystal clear, totally actionable plan. And this really gets us to the core philosophy of what this system, and honestly, what any great trader is really trying to do. It's a fundamental shift in how you think about the markets, and it's so important to understand. The system's guiding principle is right here. Play the confirmation, not the forecast. Think about that. It didn't waste any energy trying to predict which VIX number was the right one. Instead, it built a plan that simply waited for the market itself to confirm the reality once trading began. It acts on what is, not on what it thinks might be. And that really leaves us with one final question that goes way beyond the trading floor. When you're facing uncertainty, when you're getting all sorts of conflicting information, is your goal to be right about your prediction, or is it to be ready for whatever reality actually unfolds? What this system shows us is that being ready, well, that's the only goal that truly matters.